We have enough time to analyze incoming macroeconomic data before making a decision on a monetary policy. If you are our regular viewer, you will be able to recognize on the first try to central bank that there is in such comfortable conditions. You will certainly name the currency which is now only held back from a further falling into the bearish zone by the shaky prospect of its regulators' intervention on Forex. Considering that the Japanese yen owes its weakness to the Bank of Japan and its ultra-loose monetary policy pursued for many years, the leeway of its support is very limited for the financial authorities. This is either the injection of dollar reserves into the currency market or the so-called verbal interventions. Officials talk that the high volatility should be eliminated on Forex. It would seem that the daily repetitions of the same message would have lost its impact on the traders a long time ago. But this does not happen, and the yen is moderating its fall, or even goes into consolidation as it happens today. What lies behind such a dynamic? The Japanese authorities can indeed carry out a real intervention at any moment. Moreover, without warning and without subsequent comments, in such a nervous atmosphere, there are very few dollar bulls willing to take risks. They still hope to receive clear signals from the Japanese authorities. In addition, a relative calm in trading on Thursday is explained by another reason. Traders prefer to wait for the release of the U.S. labor market report. After all, yesterday's economic data, despite their contradictory figures, hurt the US dollar again. It's an index that measures the greenback's strength relative to 6 rival currencies, has been in a correction for the 3rd day in a row, and the greenback also opened the New York session trading lower within the intraday corridor between 104 and 104.30 points. But despite the pullback, the US dollar is still the best performing G10 currency, especially against the Japanese yen. After all, the Bank of Japan kept the short-term interest rates close to zero, while in the United States they exceed 5%. Traders began to sell the greenback in light of a weaker than expected business activity in the services sector. A little earlier, the US dollar went up in response to the manufacturing PMI. As we can see, the US economic statistics look very unstable. Along with the incoming news, the volatility of the US dollar is growing. Investors lack confidence because of uncertainty about the actions of the US Fed to lower interest rates. The Fed Reserve Chairman talks about a comfortable amount of time to make an important decision. After all, it was this quote from Jerome Powell's speech yesterday that we cited at the beginning of our video. Moreover, the policymaker believes that the data received this week on the number of jobs and inflation, which turned out to be higher than estimated, still do not change the overall picture of the US economy. His phrase, "at some point this year," describes the timing of the first cut in the United States base rate as vaguely as possible. So far, June is the most often mentioned in a forecast. However, the FEDWATCH tool shows that almost 42% of the market is already more hawkish and does not expect changes in interest rates in June. After yesterday's comments from Jerome Powell, Wall Street received some relief. So, the S&P 500 and the Nasdaq even closed slightly higher, but still, we shouldn't expect active dynamics from the US stock market today. Therefore, the S&P 500 traded moderately higher on early Thursday in a narrow range of 5,200 to 5,229 points. Will the US labor market report increase the chances that the ECB and the Fed Reserve will move to monetary easing at the same time? We will receive an answer only tomorrow. Today, the Eurozone's economic data is on investors' radars. Revised factory inflation data and PMIs for March were published there. The services PMI was upgraded to 51.5 points, and the producer price index is to its growth to an 8-month low. The composite PMI was also revised upward. It rose above forecast from a 49.2 to 50.3 and became the highest figure in 10 months. The positive effect from the report unveiled today is not so much the numbers as their revision itself. This fact indicates a stable fall in inflation and the Eurozone and thereby reduces the time until the first rate cut by the ECB. Such prospects should have sent the euro to the bears, but the euro continued to rise since the opening of today's trading. Remarkably, the euro is extending its strength after yesterday's impressive growth. The euro received support from upbeat reports on a rise in business sentiment in Europe. Another catalyst for the euro's growth is an unexpected slowdown in the United States services sector, which led to the dollar falling on Wednesday, and today the euro-dollar pair is again amazing traders. Contrary to logic, the euro first unexpectedly rose above 1.2850 and then touched the critical resistance of 1.2870. Where the lows of a fundamental analysis are turned off for some time, either speculation or unexpected news comes to the fore. In our case, the euro is growing, most likely due to speculative activity. At the same time, it's clearly overbought. Therefore, the upward impulse is likely to slow down and will be followed by a pullback. However, the current growth inertia may persist for some time and overbought signs may be ignored by speculators. In this case, the currency pair will target the next round mark of 1.09. Interestingly, unlike the euro, oil prices failed to take full advantage of the US dollar's weakness. There were all the preconditions for this. After all, yesterday's OPEC Plus summit maintained its current policy of production cuts. In addition, various supply disruptions and good demand prospects in the United States were also expected to support oil prices. However, the Brent price consolidated today in the range of $89 to $89.90 per barrel. At the same time, Brent could not cope with the tough resistance of $90. However, the combination of risks that triggered the oil rally has not gone away. Thanks to them, oil is trading at its 5-month highs. The same factors also keep its quotes from a sharp fall. If the situation preliminary in the Middle East does not change, then oil will soon be able to rise above $90 per barrel. From the point of a technical analysis, stabilization of the Brent price above this level may well lead to new highs. You have watched the market review by InstaForex analyst for Thursday, April 4. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments, so see you online tomorrow.